Welcome to TSIB Talks, where we share information on construction insurance and its possible effect on your business. Enjoy our latest episode.
Well, welcome to the podcast, Mike. If you want to take this time real quick and just introduce yourself, that'd be great.
Sure. Thanks for having me today. My name is Mike Dugan. I work with Turner Surety and Insurance Brokerage, and I've been a surety broker now for almost 25 years.
Awesome. So to kick things off, we'll start with the first question. What makes a construction-oriented CPA different from a general accountant?
Well, that's a great question. First of all, a construction-oriented CPA would specialize in construction-specific financial practices such as percentage of completion accounting, job cost tracking, and work-in-progress schedules. They would also know how to navigate tax strategies specific to contractors and help to ensure compliance with revenue recognition standards. And this expertise is really invaluable when it comes to presenting contractors' financial statements to a surety company.
So why would a surety company care?
Surety underwriters rely heavily on financial statements to assess bonding capacity. Accurate, well-prepared financials give underwriters confidence in a contractor's ability to manage cash flow, handle debt, and complete projects profitably. And a construction-oriented CPA can ensure that your financials are presented in a way that highlights your company's strengths and to make that presentation more surety-friendly by including open and closed job schedules. A serious, well-regarded construction-oriented CPA also knows that you'll need your year-end statements in March or April, not August or September of the following year. Many small contractors think they're doing themselves a favor by choosing the lowest cost CPA, where in reality it's actually the opposite. Spending a bit more on a qualified construction CPA can mean additional surety support and more gross profit on that additional work in the long run.
Thanks, Mike. I think that really showed how CPA is important. Now, let's shift gears a little bit here and talk about the internal financial controls.
Yeah, also very important. So for small contractors, running a tight financial ship is crucial. Without strong internal financial controls, you're leaving the business open and vulnerable to errors, fraud, and inefficiencies. So let's discuss why this matters. Let's be clear about what we're talking about here. Internal financial controls are the policies and procedures that ensure that a contractor's financial transactions are accurate, transparent, and secure. They're designed to protect the contractor's assets, ensure compliance with laws and regulations, and provide reliable financial reporting. And when those controls are weak, it can lead to cash flow issues, as an example, from mismanaged billing or payments, project cost overruns due to poor expense tracking, and potential legal troubles from noncompliance with tax or labor laws. And of course, there's the impact on your surety bond program. Surety companies want to see that you're financially disciplined, and strong internal controls give them confidence in your ability to manage projects responsibly.
So where would small contractors focus their efforts?
Well, I really see three primary ways that they can focus their efforts. First of all would be segregation of duties, meaning avoid situations where one person handles multiple financial tasks like invoicing, payments, and bank reconciliations. And then segregating these duties reduces the risk of errors and fraud. Second one would be job costing and budget tracking. So implementing systems to monitor project costs in real time. This helps you stay on budget and ensures accurate reporting to surety companies. The third one would be regular reconciliation and audits. So reconciling bank statements, accounts payable, and accounts receivable monthly. Periodic internal audits also add an extra layer of accountability.
Now, what about the solutions to this?
So my suggestion is using accounting software like QuickBooks or Sage Construction to streamline processes is really just the start. Most small contractors are actually using QuickBooks. Sometimes it makes sense to upgrade to programs like Sage Construction. Many platforms offer job costing, expense tracking, and even fraud detection features, but they have to be used effectively and consistently. Next, you should create written policies. That would mean documenting financial procedures from expense approvals to payroll processing. This ensures everyone on your team understands and follows the rules. And if you're stretched thin, consider hiring a part-time bookkeeper or CPA. Their expertise can fill in some gaps.
Yeah, I think that's definitely important because you never really want to be stretched too thin in anything, and it's definitely very, very useful to hire someone that can fill in those gaps that you're missing. Now, moving on here, can you talk a little bit about the importance of delivering this information in a timely way to surety companies?
Yes, surety companies are more than just providers of bonds. They're partners who support your growth and stability. But this partnership is only as strong as the information you share. Providing timely and accurate updates to your surety can mean the difference between securing a new bond or hitting roadblocks when you need it the most. Surety underwriters rely on current data to assess your financial health and project performance. Delays in sharing critical information can create uncertainties, erode trust, and ultimately slow down the bond approval process. I thought I'd take you through some reasons why it makes sense to make sure information flow is timely. First would be improved decision-making. Sureties use that financial data to determine bonding capacity and pricing. Outdated information can lead to delayed decisions or even bond declinations that could limit a contractor's ability to take on new projects. Second one would be risk management. Early identification of issues such as cash flow constraints or cost overruns allows your surety to provide guidance or solutions before problems can escalate. And the third would be strengthening trust. Consistent communication shows your commitment to transparency and professionalism, reinforcing your relationship with the surety. Keeping your underwriter in the dark is never a good idea.
So what should you be sharing with your surety and how often?
Well, let's talk about the essentials. The first one would be financial statements. First, share year-end financial statements promptly. These should include a balance sheet, income statement, and cash flow statement, preferably prepared by a construction-oriented CPA, as previously mentioned. The next would be work in progress or WIP reports. Provide monthly or quarterly updates showing job progress, costs incurred, and projected profitability, along with over and under billings. This helps your surety assess project health and overall backlog. You also want to communicate operational changes to your surety underwriter. Notify your surety about significant events such as new project awards, contract disputes, or changes in key personnel. And of course, business plans. If you're expanding into new markets or want to increase your bonding needs, share that strategy with your underwriter and how you'll manage the increased risks.
Do you have any tips for keeping this information flowing?
Yeah, absolutely. My first one would be to establish a routine. So set up a schedule for regular updates. For example, make it a priority to send year-end and mid-year financials and WIP statements on the timeline requested by your surety company. Then it's a good idea to leverage technology, use accounting and project management software to generate accurate, up-to-date reports quickly. I would designate a point of contact, assign a team member such as your CFO or controller to be the primary liaison with your surety. This ensures consistency and accountability. And then proactively communicate any issues. If you're facing challenges, don't wait for your surety to ask. Address the situation head-on with a clear plan for resolution. Again, keeping your underwriter in the dark is never a good idea.
No, definitely not. It seems like they really are the key to getting bonding and making sure you continue to get these bonds. With that being said, unfortunately, that is all the time that we have today. So I just want to take a moment to thank you for being on this episode, and I appreciate it. I learned a lot, and I'm sure our listeners did too.
Thank you very much for having me, and I look forward to revisiting the podcast again soon. Thanks.
Thanks for listening to this episode of TSIB Talks. If you like this content, be sure to follow for new episodes. Until next time.